Welcome back. Well, the Nifty is holding up all right, 19,574. It's a banking index that continues to be under pressure. So let me take it across to Gurmeet Chadha to get his view on the same. Gurmeet, we were hoping HDFC Bank will come out of the hiatus. Kotak Mahindra Bank, of course, that entire leadership flux it is in. ICICI Bank delivering great numbers but not getting the kind of valuation or the investor interest right now. What would make the interest come back in these large cap private banking names?
So, Anisha, individually, probably it would be different. So, Kotak, I think, is more succession planning. The market wants to see, by now it is, I think, almost established that the succession planning is, will be internal. And the two names look like Mr. Manian and Ms. Shanti, which have been veterans for the bank. I think what we got to see what is the attrition, because typically there has been some level of attrition at mid and senior management. So it will take a little time, in my view, to stabilize. Plus, if you see the last quarterly numbers also of Kotak, the quarter-on-quarter loan growth was just 2.5%. Growth of 16-17%. Now you're getting that growth in a lot of other banks which are 2 book multiple or less than 2 book multiple. So it's always relative valuations, but it remains a very solid bank, so I think it's consolidating. HDFC, again, the market wants to see how the combined entity would deliver. There is about some overhang because of the weight being now more than 10%. So a lot of funds have to shed that. So market wants to see whether how much pressure really comes on CASA, what is the pressure on cost of funds, what is the NIM compression which will happen. And that's the reason, you're finding these stocks in a range with probably some downward bias. But I don't think so any long-term thing changes as far as all the top 3 banks are concerned. And then you have had, some good performance from tier 2 banks, some mid-sized banks like IDFC First, like Federal Bank. And so there's some rotation of capital which is also happening, and some of the good financials, some very niche plays in NBFCs, etc. So it's some rotation of money happening there. Otherwise, broadly, it's okay. I think I don't see financials in terms of real stress coming. And the interest rate cycle is still very much, at some point of time, the credit cycle will also reverse. Some stress will come, but probably we are some quarters away.
Gurmeet, did you look at Jio Financials lately? I mean, it rallied made a low of 202 and then went to 265. Have you got it in your portfolio or not yet?
Ajay, we do have it in the portfolio. Courtesy, we have large holdings in Reliance, and also we bought some, when it got started getting trading, some probably at the lower circuit, because we again are on the very long side. This is something we know that over 3-4 years, a team which has KV Kamath, Hitesh, and some great bankers they are hiring they are not here for just 10-20,000 crore lending book. They will grow this. And and probably grow this through some inorganic acquisitions. So plus they are getting into asset management. They put up a huge capital. They will get into insurance. They already have digital payment banks. So it will be a very, very formidable player. But it will take time. For example, they hardly have, I think, maybe 15 people in collections. There's hardly any collection infrastructure in place. The credit underwriting team would evolve. The focus would be more on SME and unsecured lending to begin with. Secured, I don't think so they're touching to begin with, but they have the capital and the network to really grow fast as well as also acquire assets. So this is a more of, you should not look at it from a near-term play. Obviously, the stock has run up post-listing after getting, being in that segment. But this has to be a more 4-5 year play where you're betting on something becoming big over a period of time. But as I said, in the near term, we are more happy with something like Home First, very solid player, good AM growth, great collection and credit capabilities. Something on the other side. That's something which.
Okay, so Home First is one of the stocks that you like, and Jio Financial is already in the portfolio. But just keep an eye on Jio Financial, because 2 days the stock has not been in circuit, and Nuvama had come out with a note that if the stock doesn't remain in circuit for 2 days, it's likely to move out of the Nifty on the 3rd day. So we'll watch out for the volumes on that one tomorrow. Almost 105 million kind of shares might see passive outflows on account of it getting out of Nifty. So we'll watch out for that. But since we're talking about NBFCs, Jio Financial is probably the second largest NBFC. The first is no price for guessing, that's Bajaj Finance. But which is the third one? Let's go across to Somit to find that out.
Well, it's IRFC, and the reason why we are talking about this stock is not only the fact that it is now the third largest NBFC after Bajaj Finance and Jio Financial. In fact, Jio Financial has not started business, so if you exclude Jio Financial, it will become the second largest NBFC with a market capitalization of close to 93,000 crore rupees. In fact, it's even bigger than Shriram Finance, M&M Finance, L&T Finance, and Poonawalla Fincorp. But the main reason is yesterday there were nearly 54 crore shares that traded on the IRFC counter. That is nearly 30% of the total public shareholding and nearly 4% of the total liquidity. The stock locked in an upper circuit of 20%, which is the highest move seen in IRFC since its listing back in January 29, 2021. In fact, in the last 1 month, the stock has seen, in fact, since listing, if you see IRFC stock has gained more than 10% only 4 times, and all these 4 times move that we have seen in IRFC has happened in the last 1 month. So what is so buzzing about this stock? Firstly, if you see IRFC is a market borrowing arm of Ministry of Railways. It is a no risk, no loss business model that the company has. There is no interest rate risk. There is no credit risk. Well, there is also no asset liability mismatch risk when it comes to IRFC. And from FY17 to FY21, if you see, it had financed nearly 40% of the capital outlay of Ministry of Railways. But there are some risk to this rally that we can currently see, because if you see in FY23, their disbursements were down nearly 46% on a YY basis, and for FY24, the management has so far not got any indication from the Ministry of Railways of what would be the financing that they would be requiring, because in the budget the capital outlay for railway was at close to 2.4 lakh crore rupees, and this was supposed to be financed via budgetary support. So no clear indication on the funding requirement for RFC has been currently given, and they're expecting some more clarity to come in the second half of financial year FY24. And if you see, the capex requirement also from IRFC has been on a declining trend. On FY24 it was 46%, and in FY23 it came down to only 19%. But the biggest risk coming in for IRFC going forward is the fact that the government might be looking to dilute their stake. Currently they hold around 83.4% stake, and as per SEBI norms, by the end of January 2024, they'll have to bring down this holding to 75%. So that is a bigger risk coming in for IRFC going forward. Also, the valuations have become expensive. It is trading at close to 1.9 times price to book, while the average valuations were so far around 0.8 times.
Soumit, we have our guest with us. Gurmeet, so just a quick follow-up on JioFin. Do you think the stock can double in the next 3 years?
I think it will create tremendous wealth. If you do some calculations, Ajay, for example, what do you think the lending book would be, let's say, 3 to 4 years from now? I think it would probably be in top 3 NBFCs. Bajaj Finance, for example, has now almost nearing 3 lakh crores over let's say a 10-year period. So I think Jio could probably do that in 5 years, 6 years maybe. Plus, as I said, they will incubate more businesses on asset management. So you have to actually evaluate it more with Bajaj Finserv actually, than just the lending arm of it, right? So I think it can create a lot of value in my opinion. But as I said, you have to test it once in one credit cycle. Bajaj Finance has multiple stress tests, right? And Finserv, which was COVID, Demon, etc. We've seen so many credit events in last 10 years. I think the real test will happen and that's when your credit underwriting skills get. So I think I'll not be surprised if it's too
right. So after of course getting listed and all this action happening, there are some big names also doing the round who will be heading their asset management business. But of course we cannot talk about those names, but you can find out yourselves. Some interesting names doing the round. You've heard of it too, right, Nisha? We can talk to our viewers about them. But coming back to Nuresh, in fact, why don't we take some BTST trades?
Okay, time now to take the BTST trades. Buy today, sell tomorrow. Nuresh, what do you have on your radar?
So first is about Reliance Industries going defensive here. Stock trying to bounce back from 20 and 2400 marks. Stop loss at 2400, target price of 2500. Second is a buy on IndusInd Bank, knocking at that 1430, 1440 resistance, preempting the move here. Stop loss at 1410, target of 1470.
That's a BTST trade coming in. Kunal, what about you? Do you have BTST or STBT, given you believe it's getting a bit toppish?
No, I think toppish is part of a process for the mid caps and small caps. But then in terms of few stocks as a BTST trade, to buy calls, NBCC, The stock giving a breakout above that 58, 59 mark today. So would suggest a buy with 66 as a target, stop loss at 55. And Glenmark Pharma, in fact, many of the pharma stocks are making a very good comeback for themselves. Glenmark Pharma at 790 approximately levels looks attractive for 805 as a target, stop loss at 772.
Okay, so those are the top recommendations coming in from our chartist. You know what, let's do one thing. Let's go across to my colleague Sharat to also find out what the chatter is like in the dealing rooms today. Sharat, which is the most talked about stock and why is that?
Well, in focus is Devyani International, and what we are hearing from the dealers is sustained buying is coming in across DI counters, and looking at the volumes also, if you look at it, it's coming in almost 14 times its 20-day average. Apart from this, of course, the stock at its all-time high levels as well, and the key DIs invested already in the company includes the name of Nippon Mutual Fund, and also QSR counters are also buzzing and HNI activity is happening, and this is because of two reasons: anticipation of the festive season demand, and also there has been stability in certain raw material prices, especially on the cheese front as well as on the poultry front. Now going ahead, the triggers for the companies, especially a turnaround expected for the SSG growth in the second quarter of this fiscal year, and the company plans to add roughly 275 to almost 300 stores this year as well.
All right, Devyani International is coming back on institutional radar. Clearly, it is visible on the charts as well. And by the way, it is actually the valuations of it. The stock is lower than Jubilant. So people have started moving some positions out of Jubilant into Devyani. But I would like to get Gurmeet's view on infrastructure kind of stocks. You know, so PNC Infra got very good order flow, GR Infra, HG Infra, and many other than today. Vishnu Prakash Pungalia actually got listed and saw very good response because they priced it intelligently 12 times forward. But after listing and after discussing the growth prospect, it comes to 9.5 times forward.
So that's pretty much okay,
Yeah,
given
that
the
was
industry
very good.
average is 13, 14. But you know, from the infrastructure of the country, I want to move on and talk about the digital infrastructure that has been put in place, and that's by Paytm, and Vijay Shekhar Sharma is speaking at Global FinTech Fair. So let's cut across to that.
The gig economy or the obligation of gig worker is a mainstream job to be done in the country. We can expect literally 50 to 100 million people becoming in due course part of this gig economy. So when we talk about understanding for building for financial services, we could build just like what I'm talking about, the different kind of job profiles. In my opinion, the gig economy workers are treated literally not yet as an addition of the inclusion agenda either, because mostly the inclusion agenda is taken towards a sort of a rural or a poor person who takes some sort of grant or some sort of elements. But these are the people who are literally on the fringe of this border of nay or yay, and then from there on their journey has to start. So gig economy, pretty large segment of customer base. Most of us do not look at them as a potential customer because neither. So it's a very sad thing that they don't fit into both Venn diagrams of you have a job or you don't. At the same point in time, they don't have a job and they still have a job. If you saw the trailer, it was very uncomfortable to know that I think no company's performance evaluation system will be that real time a criminal to a person as this was. I mean, just because your ratings got downgraded, and I totally get it. Somebody does give a food packet and they actually tell me, sir, please rate. And I wonder that it must be a key KPI for them. And obviously I understand at the back of the things that a higher rating system gets into this, all this gig economy worker. It's an extremely tough job. And as a financial system, we are not necessarily serving them yet. We are not necessarily understanding what their needs are.
Yep, and that's what we are talking about. One of the things that Nandita mentioned is they are on their own. And I'm going to come back to Nandita with a question about gender in this story. But before that, I want you to talk a little bit more about this. They are on their own. And how does the financial system, how will the financial system look at them going forward?
That's a commentary coming in from Vijay Shekhar Sharma, but the commentary which came in 2 days back interested me more in that. And that seemed to be suggesting that Vijay Shekhar is keen on raising his stake in Paytm. The stock has shot up to almost 3% at day's high. But are these the good levels to get into, or a rally has already happened in the last 6 months? Gurmeet, would you take a look at all these consumer stocks? They have doubled actually from recent lows though.
So Ajay, I think what has changed is clear focus on profitability, right? And instead of just achieving scale, I also met some of the unlisted guys, including MobiKwik and others. I think the focus is clearly a glide path to profitability. Paytm also is, other than payments, is developing a very nice co-lending platform. The lending business is actually what's doing the heavy lifting. The payment business is also stabilized a bit. And this news of obviously promoter hiking stake is good, group reducing stake is also good from a, if I can say, from a geopolitics point of view, right? We are looking at this space, but we haven't really started digging and buying some of the new age companies. But we do like Paytm, Zomato, even Policy Bazaar. I think Policy Bazaar, especially, very asset light model marketplace for both lending and insurance products now. The lending platform also stabilizing. And I also consider Jio Financial as new age as anything else. The way it will evolve. There are a lot of some very niche lenders which are evolving digital lending in a very, very good space. So you probably can create a 4-5% basket within the 100% portfolio of yours. Put some exposure in some of these new age companies. Be ready that some of the investments will go bad, and some of them will probably be 10-20 baggers. I think that's the best way to play this, rather than just going aggressive towards one or two counters.
Better to diversify your portfolio and not put all eggs in one basket, given the fact that some of these companies, the new age companies, will definitely be disruptors, and some of them might just go the other way, so you'll have to wait and watch for that. But one space which has been doing really, really well for itself and building onto gains is the real estate pack. We are seeing good gains coming in there, right from a Lodha, which is up around 5%. DLF is seeing quite a bit of traction. Kunal, which stock looks the strongest? Because a lot of them have actually run up quite a bit. I think Lodha was one of the ones which hadn't run that much, and it's catching up today.
Yeah, it's catching up quite well, but I've learned this from stock markets that when you're betting on high beta sector, you bet on the formidable stock within the high beta spaces. You don't go with the extreme high beta stock within such a high beta sector like real estate or sugar, etc., where these stocks, they tend to move up 20-30% in a short span of time. And I think looking at the statistical part, I think DLF comes out to be one of the more formidable names, least amount of volatility, at least looking at the last many years of charts for DLF as compared to the other peers. The stock tends to get into a time-wise correction every time whenever the sector goes into a price correction, and that's generally considered to be a healthy sign. In fact, even today or yesterday, the stock made a fresh high of 520 plus levels, breaking past towards 2009 high for DLF. So that's the most formidable name from the real estate pack if I have to choose one.
Gurmeet, will you concur with the view? DLF, you are closer to ground where they operate. Is that doing very well in the NCR region or not? And would you play through the real, through the direct real estate players, or cement is one space which is coming back, home building is doing okay for itself? How would you play it?
No, I agree with Kunal on DLF. I think if you see last year, their pre-sales were almost 15,500 crores, which was ahead of their guidance. And they're clearly having, they recently interacted, or the management interacted with few leading brokerages over a call, saying that the development side continues to see very robust traction. They have a very good pipeline, both in luxury and mid-end. They want to double the office, the retail portfolio also. The office segment is also doing pretty well. And most importantly, the balance sheet is in great shape. I think what is happening is that the impact of RERA would now be visible in this sector. You will see more bigger, stronger builders, more corporate builders now. The local builders are, as it is, especially in North, are disappearing. So the stronger ones, if you see the last 7-8 launches, they're all by, if you take NCR, it's largely DLF, Godrej, Max, and L&T. That's the bulk of the most launches which have happened. But we like building material, as I said. We've been owning cables and wires, Polycab for a while now. We like the tile makers. I think one big theme which all of us are probably witnessing is this entire home improvement. We are spending more on our kitchens, on our in our bathrooms, on our bedrooms, whether those are in terms of tiles, in terms of the decor, etc. So I think that story is more long term and more durable, and in a better return ratios as well compared to the developers.
Yes, home improvement is one thing that definitely all of us are spending a lot more on, and perhaps the other space where we are spending a lot more is hospitality and travel, because that space is firing away too in the, not just the trading session today, but otherwise as well. That space has been doing okay. I'll come back to that. But before that, Naresh, I want your top bet within the IT pack, apart from Wipro, which you have of course talked about. So which is the other IT name that you really like?
So the earlier one was Persistent, which has also moved up. Wipro is there, and now HCL Tech is the one which looks most promising in the large cap IT name, because that's the only one which has recovered really fast and is closer to the highs of last 1.5 years. So that's a stock which looks more promising, could break out down here. A buy on dips on HCL Tech.
The top, bet after Persistent and Wipro, which have already moved up. But Gurmeet, what's your take on IT?
I think we'll probably see another quarter of soft numbers. How much is it in the price? I think the verdict is still, quite divided on that. I think there is some slight uptick in deal momentum. It's not as bad as what the street feared, but I do think generative AI will create a lot of disruptions. But the industry has seen that over last few decades, a lot of disruptions. So my view is you've got to be a little selective, right? I probably think that among the larger ones, HCL looks the most reasonable from a risk-adjusted point of view. Tech Mahindra is undergoing again a leadership transition, so probably we'll have to see how much change the new team brings in. And in mid-cap, I think you got to be selective. So you have people like KPIT, which have done extremely well. It's a more an auto-embedded software play. And then there is a couple of mid-cap names which have done well, including Persistent and others. So got to be a little selective. But I think maybe a quarter away. Probably it's a little too early to jump on, IT. Probably when the Fed formally pauses and says that we are done. Even if you miss out 5-10%, I think that's a better time to go overweight IT. For now, I think I'm neutral. I'm not exiting, but not adding either.
Not in a rush to add more positions, just wait by and get more clarity as to which way the deal pipeline and rest of the momentum is panning out. We've talked about the spaces which are doing well, but Kunal, which is that space which you think is getting very overheated and perhaps one should look at booking profits? We have today seen quite a few metal names and cement names are coming under pressure, and even PSU banking, some of them. Are there candidates where you would suggest to take profits?
I think the two stocks within the power space which looks frothy, REC and PFC. Okay. So I would not call that the entire power space is frothy, because many of the stocks like Power Grid, etc., these stocks have gone through a mild correction for themselves. But I think PFC and REC is where I would expect a decent correction, at least a broader 10% correction from the recent swing highs or the lifetime highs, in fact, for these stocks is something which I would probably expect over the very near term. There are a few stocks from the railways pack which are also looking a bit frothy, because I think most of the RSIs for these stocks are now upwards of 92 for these stocks on the daily time frame, which is extreme overheated for the stock price. So the best strategy over here is to either book 50% profits at current levels and then keep a 2-day or a 3-day low as a trailing stop loss for this trade. So the stocks where the RSI has gone to an extreme overbought territory are the ones where I would probably advise profit booking as well as starting to trail stop losses, rather than just expecting that this momentum would continue and the price gains would consistently flow into these stocks.
Okay, so those are the places where you should get a bit more watchful, maybe try booking some profits because it's getting a bit frothy. But you know what, let me take a quick dipstick survey, as we call it, and talk about 20,000 on the Nifty. Naresh, when do you see it happening? September itself, a few weeks, a couple of months? When do you see 20,000 on Nifty?
So, as of now, the view is in September.
But itself, Kunal?
26th September.
Oh, so he has a specific date in mind. Forget the week, forget the month. He has a specific date in mind. Gurmeet, what about you? Do you also expect 20,000 on the Nifty to happen soon?
No, I don't know. I don't know when it will come. It has to come. But when it will come, I don't know. But as I said, I think this decade is looking good. We are more on the long side. I think the things are beautifully positioned. It's just that you have to avoid accidents. And I agree with what I said before. A lot of fraud building up small micro cap plays. Also, the most discussed sectors, defense, railway, and stocks basically going up only on order book. Just be a little careful. We've seen that, right? Specialty chemicals, graphite makers, electrode makers, anything fashionable, just be careful.
And there's a lot of fashionable sense in the market. But you know what, Kunal? Why 26 September? Is it your birthday? Is it somebody else's birthday? Is it a special day?
I was waiting for you to ask me that question. So you'll be amazed. This rally started off from 17,000, sub 17,000, March end. Okay. 26th of March is where we hit 17,000 first time. 1 month later, that is on April 26th, we hit 18,000.
Oh.
2 months later, that is in July, we hit 19,000. 26th again for the first time.
Wow.
That's June. 2 months later, we hit 26,000. So by that, we can expect 20,000 by 26th of September.
That's a very, very interesting analysis there. I don't know what got you to do that analysis because I wouldn't have thought about it. But the other thing that we're watching out for is the World Cup, right? And of course, the team announcement happened today. I will have to confess my ignorance there, Kunal, because I don't know too much about it. But I think the squad has been announced. Rohit Sharma is the captain. Anything that you're watching out for? Any surprises, any misses?
No surprises. I think Tilak Verma is left out because I think he's a batsman in form. And I think KL Rahul has made a good comeback. So after injury.
Any other comments coming in from you, Gurmeet or Naresh, on the cricket if you're big followers?
No, I just think they've done too much combination going in. While the heart says that India should do, but the head says that somehow the top order is not in great form. I just hope they probably peak at the right time. I just hope things work out well.
Okay, so you have the visuals as well there.